Ryan, there continues to be a stream of new ETF products hitting the market. Which areas are hottest right now?
Well, I think when you're looking at new launches, it's stuff that's moved beyond just traditional market cap weighted indices, right? Things that are a little bit more thoughtful, whether it's thematic, whether it's broad-based factors. I think investors in general have an appetite for stuff that is differentiated. And I think from an Invesco standpoint, we're launching additions kind of around the world of innovation, particularly with our launch of QQQS just over a month ago.
Well, we'll talk about that in a second, but can you talk about your entire innovation suite? What does it do for an investor?
Yeah, so I think most people know the innovation suite or the cornerstone, QQQ. It's been around for over 22 years, a lot of name recognition. But because of that success, back in 2020, we launched some additions to the QQQ family. One is QQQM, which is a Nasdaq 100 tracking ETF, so a little different than QQQ, lower expense ratio, more built for the retail buy and hold investor. And QQQJ, which tracks a basket of largely mid-cap companies following the Nasdaq Next Generation Index, kind of the next 100 companies down from the Nasdaq 100. In 2021, we launched ESG versions of those two ETFs, QQMG and QQJG, and then again, most recently, the launch of QQQS.
All right, you're expanding the brand. Let's talk about QQQS right now. How is that comprised?
So you have the Nasdaq 100, the starting point, the 100 largest companies listed on the Nasdaq exchange, ex financials. Below that, you have the Nasdaq Next Generation, the next 100 largest ex financials. Now with QQQS, it's designed based on patent value relative to market cap. So a little bit of a differentiated look there. Effectively, we partner with Nasdaq, of course, and a firm called IPR Strategies that evaluates patent values. And the next 200 companies, based on that patent value to market cap, are included in QQQS.
And have you done any back testing to see why patent value is important to an investor? I imagine you have.
Yeah, so we lean on our partners here at Nasdaq pretty extensively, and a number of conversations with them and IPR. And I think ultimately, when you're looking at patent value, it goes beyond just the pure number, right? I mean, there are a lot of companies out there that have tremendous patent portfolios worth a lot of money that haven't really done much. So I think in taking the extra step where you're looking at patent value relative to market cap, it gives the investor the opportunity to gain exposure to some of these companies that may have an underappreciated patent portfolio.
And once again, these are small cap companies because people know the triple Qs because those are the giants of the tech heavy Nasdaq, if you will.
Yeah, absolutely. And I think as you start to go down with QQQJ more in the mid cap realm, QQQS certainly leaning small cap.
And then finally, how do you make sure there's no overlap? Because you have QQQJ, QQQS, you have the QQQs. How do you make sure that you're a diversified investor? You're not just getting the same old things.
Yeah, a lot of Qs in there. But I think when you look at the methodology of each of the indices, they're designed to be complementary with one another. So with QQQ or the Nasdaq 100, those 100 largest, that's the starting point for the Nasdaq Next Generation Index. So there will be no overlap between the 100, the Next Generation, and then at the bottom, the QQQS or Nasdaq Innovators Index. So it's designed to be used complementary, and it was a very big talking point and development point when we're looking at these funds to make sure that there was no overlap between the three strategies.
All right, well, thanks a lot for coming on and talking about it.
Thanks, Greg.